morning, traders. Welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to share with you this special edition because we have some complex markets this week. The S&P is crashing, the Bitcoin is crashing, so we are going to check the Bitcoin, the S&P, the bond, and the euro because it's an important week. But don't forget that you can get access, full access, to our fantastic membership by visiting ElliottWaveStreet.com. Then you click on the membership tab, and you will get the details about the memberships. Pick your membership. Is just $19 the first month, then $75. So you pick your membership, you sign up, and you get immediate access to this fantastic Elliott Wave analysis. All right, traders. So let's talk about market cycles today. In the daily video that I post for my clients, I was talking about these market cycles, where the market cycle works like this. When we have the price going down, let's say, at any level X, the price bounces and then moves down, and when it tries to cross the previous low to breakout, it bounces, and then it repeats the process, and it could be one time, could be two times, could be three times, could be 10 times, right? Doesn't matter. This is called accumulation. So accumulation is when the big guys are buying, are doing the accumulation, but they can't buy one big trade because they will push the price immediately higher. So slowly they need to capture sellers. They need to capture sellers to buy, and buy. Once the campaign is done, they push the price higher, breaking this area. That's what we call wave 1. Wave 2 to retest, to make a test, and if everything goes well, their campaign is successful, they make money, they start doing the same pattern but at the top. That is called distribution or short accumulation nowadays, and we start seeing the same pattern now at the market tops. This pattern could show like that, or eventually can have something like this. It's fine, it's just the concept, and once they have the completion of the pattern, they move the price lower, and they are going to repeat and repeat that process. So where are we in the euro? Interesting question, right? Let's see it on the daily chart. On the daily chart, the last accumulation happened here. Look, the price moves above the pivot and returns. So here, when the candle closes, is where we know that we are in an accumulation process. So we start tracing the lines, we start picking the levels, we start looking for the important levels, and the price moves down, bounces up, and fails this time to make a higher high. It returns. We have a good sign of a strength. The price makes the test, accelerates. This is the public participation that Charles Dow was mentioning. All these accumulation and distribution schemes are coming from Charles Dow. Also, the Elliott Wave theory is based on that accumulation distribution process. And this point right here on the price, what I'm calling wave 3 black, is the same point here. So look, if we were here and this happened, and we are here, what is going to happen next? I'm saying that this price action right here is the same as this price action here, right? So we need to have a leg down below the previous low. Could be that strong, or it could be more shy and reverse just hitting the low, right? We will see. But for now, the wave count is short, and the target is the previous low, and here once we have an impulse, we are going long. All right, that's the long-term plan, and we're going long to where? To the previous high, to the 123. Once the accumulation is done. So on lower time frames, our efforts are to follow the price down. The plan is that this is just the first leg down, and here we come with the three-wave sequence. So if only if the price makes the retrace to this area and makes the process of distribution or short accumulation at this area, I'm going short. So I'm ready to go short if the price moves to this area and we have the accumulation scheme. That's why it's important that you sign up for the membership so I can give you the updates. Now, the Bitcoin is in a clear bear trend. Last week, I was trying to find a buy trade. I was telling my clients that here was a good opportunity, first one, and a second setup after the three-wave sequence that actually went valid here. So let's say that we have a good trade here and we make a 1 or 2% or 3% of the account. As traders, we are not investors, you know. Well, the difference between a trader and an investor is that the investor hold the position, right? If you buy Bitcoin at 60,000, your plan is to keep it for some years and wait to see if it goes to 100K, right? If you are an investor of Apple, you buy the stock at any level. You don't make most investors are not checking charts. You just want some fundamentals, and they go long at any level, and they hold, and they know that the market is going to have some noise, so they hold and they don't care, right? But imagine on Bitcoin going long at 60,000 and having the Bitcoin at 32,000 is almost a 50% loss of the trade of your money. So that's the tricky part for the investors. But the good news is that as traders, we can have the risk under control, and we can say, you know what, I'm going to risk 1%. Some traders like to risk 2%. I like to use a 1%. So let's say that here you make a 3% on this setup, right? And then you trigger here, and maybe you have only 1-to-1, so you book profit, so maybe you didn't lose anything. Or if you leave a protective stop loss here or here, that's going to be your 1%, and that's it, and just that's your loss, right? As trader. And the investor is losing 50% or more of their investment. Some others went along at 50,000, whatever, and they are losing half of their money, you know, and recovering from that loss is something complex, or they need to continue holding, you know. I'm sure some of them are going to say right now, well, I bought at 60,000, Bitcoin is near 30,000, I'm going to hold. What else? I lose everything, almost everything, because it's not going to zero, right? But I can recover my money, or others are going to say, oh, panic, and they are selling, right? There are different cases, of course, but no good scenarios for them. So look, if we talk about the accumulation here, what is going to happen is that the price, this could be the first point, the first hint that this could be not yet an accumulation, right? It could be just profit taking. When the price moves above this area and closes above the wave 3, we have confirmation that the big guys are buying, that we are seeing demand. In that case, we have a higher probability that the price will start some sort of accumulation process, trying to shake out the market, trying to take out as many participants as they can. Nothing. So you wait. As trader, you wait. You're not going to do anything crazy. And then when the market makes a nice wave 1, an impulse, powerful demand, we wait for the corrective, and that's where we are going to start buying, only if this pattern shows up. On the other hand, right now, and with the S&P crashing today, the Bitcoin could accelerate at any moment and could start showing big red candles. And it can go to the 25,000, can go to $5,000. We don't know. We don't care, because we are not going long unless we have a clear accumulation. Plus, we are going to place a risk for that trade of 1%, and that's it. Right? We are not investors. We are traders. An investor can have something of trader, right? So an investor can use these setups to say, okay, I'm going to use a protective stop of 1% of my investment, and I'm going to hold. Right? Not like as the traders that we trade and we book partial profits, and we move stops, and we do a lot of things that investors are not doing because it's a different business, right? So that's the plan on the Bitcoin. So please be extremely careful because this thing can collapse. I'm not saying that it's going to happen. I'm saying that there are not clear signals of reversal yet. Once we see them, I'm going to tell my clients once I have a good potential to the upside, but right now we don't have anything. So be extremely careful. Don't try to buy the dip. Your job as a trader is not saying, oh, I was able to buy here, I'm the best. Nope. Your job as a trader is to have high probability trades. Yeah, if you went long here and the market, because any reason, started the reversal from there, it's not because you are a good trader, it's because you are just gambling here. Because then why not buying here? Why not buying here? Why not buying here? Right? It doesn't have any sense. We need to see a strong demand moving into the market. S&P. This is a weekly chart. In my personal case, let me share with you what I did. After the pandemic, well, we are not after the pandemic, after the crash at the beginning of the pandemic, at that time, if you have been following my analysis for a while, I was expecting the S&P here to move lower, to make a lower low, right? You can check those videos that I have here in my channel where I was expecting that, but there was a video that I said, no guys, this is it. This is corrective. We are going long. So I started my accumulation process here. My average is at 2,800. I trade the SPY. I start doing accumulation and I start adding at the corrective waves. So I ended up with a fantastic long-term trade, like acting as an investor. But now we are seeing big risks. Yeah, the S&P has been having a corrective wave several times, and this could be just one of those. But also it could be the beginning of a kind of bear market for a while before we have a continuation higher. So my protective stop for that investment, that I have an average price of 2,800, and you have been seeing all the process here in my channel. You can go back to those videos back on that date and start seeing what I was doing during the entire market cycle. I'm gonna leave it below the 4,000 area, my stop loss. You know, if we have that sort of sell-off, that's it. I'm out. I'm gonna buy later. I'm gonna do it again, but later, right? But with a good profit. Now, on the other hand, if the market shows signals, maybe here or maybe a little bit lower, somewhere above 4,000 of a good accumulation, I'm going long. I'm going to add to the position, right? So that's my big picture analysis. Now let's talk about the insights. Look at this thing. It's in real trouble. Will you buy the S&P? Of course not. First of all, this big sell-off is showing that we need to have, I was looking for an ending diagonal, but I'm going to switch for a regular impulse. But this is showing that the price needs to make a low and start the accumulation. If not, we can have a crash. We can have one of those Black Mondays, Black Tuesday, whatever, right? So it's extremely risky. And we have been seeing that the Bitcoin is a risk asset. Well, we knew that, but some experts were claiming that Bitcoin was a protective asset, that when we have any storm, inflation, or economic crisis or market crash, everyone will jump to buy bitcoins to protect their money, like the new bond, like the new gold. But it's actually not true. We are seeing the Bitcoin falling aggressively when the world is in trouble. So that's something that we need to understand, and we need to see in the charts. This is a fact, right? This is not a forecast, that's a fact. The Bitcoin is not working as a protective or safe asset. It's a risk asset. So in order for the Bitcoin to recover, we need to see the S&P going up. So it's interesting how Bitcoin traders are usually against the stock traders, right? Like there is like a battle between Bitcoin traders or crypto traders and the stock traders, and they say, oh, the stock traders are making 2% and I'm making 1000% and all those things, you know. But at the end, if the market goes down, everything is going down, including the cryptos. So we need to have the market going up in order to have any reversal on the cryptos. And if you don't see a reversal scheme on the S&P, why are you going to buy the dip on the Bitcoin? Yeah, maybe you are lucky and you make the click and you are able to hit the order at the best price possible, but you were lucky. And we are not going to trade like that, guys. We need to have a good consolidation, a good accumulation. Traders, we did today a fantastic explanation of how the market works in terms of the bond market, the S&P, and everything. So in the bond, we were looking. You were seeing that before all this happened, we were looking for a reversal on the 10-year bond. But there is a huge issue that is going on, and is that, yeah, the bond is reversing, the yield is going down, but the curve is going down. And that's a huge problem, because the spread between the 10 and the 2-year bonds is decreasing. That's why the yield curve is going down. And look, it started a while ago. It started from Hill saying, hey guys, something is not working as expected, be careful, right? So these were signals to be careful with. And if we don't have a reversal in the bond curve, if the bond curve continues steepening, let's say that becomes inverted, hope we don't get to that level, we are going to be in real trouble. And no way you're going to buy Bitcoin or a stock, right? No way, with that interest rate curve coming down. No way. We need to see the reversal here first. And the bond curve is a leading indicator. It's so leading that when it becomes inverted, it's going to tell that it's going to be a recession in 1 year. So, for example, look at this beauty. It started to warn that everything was not working correctly since the beginning of the year last year, to be more cautious. And 1 year later, almost 1 year later, is when the market is crashing. Right, so this is important. Plus, if we add inflation, actually today we did an exercise with a stagflation, the risk of a stagflation, you know, high inflation, high interest rate from the Fed, and low GDP and low employment. So actually you should go to the membership and sign up to have a look of that fantastic video we did today with a really deep analysis, bringing inflation into this fundamental scenario. That's something new that we started doing on the futures video in the membership, to make fundamentals, but with the real data, not with the news, with the bonds, with inflation. We're using oil as inflation, with the dollar. So creating this whole scenario, and has been fantastic, has been a really good thing to follow. All right, traders, so don't forget to sign up. to the Elliott Wave Street membership. You can sign up right now. It's just $19 the trial. You can start anytime. You can start right now, and you will get your access. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.